Welcome to McBoss Capital channel. My name is Michael Chu. This is my growth stocks list that we'll talk about in this video. This is for the week ending December 27, 2024. We have a very short time left, 2 more days of trading this year, and then this coming week we'll also have January 2nd and 3rd of trading. Most likely more action will happen in the new year as investors are going to come back from the holidays. So I don't expect too much to change in the next week. Probably will be continue to have lower volume in the marketplace. But we are seeing distribution day according to IBD on Friday. We have 5 and 5 on Nasdaq and S&P, which is not a good sign, meaning there's more selling in the higher volume on the index in recent weeks. You can see those red font here. Those are the days that we have for the last 3 weeks. So they're pretty closely distributed. So that's not a good sign. We have also been seeing lots of distribution in stocks. So looking at accumulation, we did have some small accumulation on Tuesday and Thursday, but again, we kind of fell back down on Friday. On the industry group side, we also have a lot more industry groups sold off the last 2 weeks, but then we did pick up a little bit, but again, very low numbers. Again, the volume is not there, therefore, we don't count those as accumulation or distribution. On the stock side, in terms of sectors, there's really nothing that stands out in terms of numbers. They're really low numbers. So again, very low volume, so there's not much happening on that end. So knowing that we are in the final week and early new year coming up, again, I don't expect much to happen. But let's look at the stock side on my growth list. There's only 4 stocks on my list out of like 287 stocks. Based on generally the criteria is they have forward earnings guidance are above roughly 10% over the next 4 quarters. This is based on October 9th, since the rally really start recently, and we have seen performance on this price column here since that time, and we have a few stocks here that are hitting new highs on Friday, but this is very low number, like 4 is probably the lowest I've seen in a long time. RELY here, currently just in the financial specialty group. And this chart pattern, this is the daily chart. It has been climbing nicely since the low here on the breakout on earnings. And then we did have a little bit of a pullback here. And then we start to bounce and we kind of move sideways here. We found support right there and then another support along that green line, which is the 10-day moving average. And then here we fell back to 21-day. And then here we found support again at 10-day. So this stock has, slowly moved. This is a very good action for a $20 stock in that range, because usually $20 stocks are more volatile. And I'm not saying this is not volatile, but at least it's been holding that 10-day most of the time. And you can see the uptrend on the 50-day moving average, the uptrend on the 21-day, and as well as the 10-day. So this is one of the few stocks that have been acting really well. We do see accumulation on the higher volume side, and then distribution, we don't see any red volume bar even above average. So that's hence the movement on the stock price right now. So it looks really good. Fundamentals are doing really improving on the earnings side, as you can see, growing quite significantly over the next 4 quarters. This is a 4 billion market cap, $22 stock. This reminds me of, this is obviously not small, and this is financial services used across many immigrants and stuff. During a market pullback or correction, we're looking for stocks with the highest relative strength, and also stocks that are really not falling as much. So there's this column here, percent off high, how far they're from their recent high based on this time frame. And so those are the kind of stocks you want to pay attention to, because once the market starts going back into rally mode, generally those stocks that are down the least are the ones that will move more easier when the market is starting to up again. So the next one we have is CAE. It did close really strong on Friday. You can see from the relative strength on daily and weekly based on 3-month time frame. And it's in the aerospace industry. This is the weekly chart. Looking at the earnings, you can see it's turning around significantly from from going down to being positive. And this is a pretty nice chart pattern right now because it has come out of this long base right here. And again, the longer the base, when it comes out, the more powerful it is. And we see that here right here. And this is the weekly chart. And we never even came back to the red line, which is the 10-week moving average. This is about 8 billion market cap right now. So it has come out like like around here and on earnings right there, and it climbed really steadily. Again, never touched the 10-day or until right here. It kind of consolidate again. It pulls back right here to slightly below 21-day, the pink line, and then it bounced from there. So this was the slight smaller base and pulled back right here, and then now it's been bouncing really strong, like 5 days in a row. Volume looks okay, nothing unusual here. But it definitely, again, another $20 stock that is quite interesting, that this one is also holding up. You see here rank 54, been doing really well with 33% gain since October 9th in the machinery general industrial area. It did fall back, you can see 3% on Friday after hitting a new high. So let's look at the fundamentals right here. We are seeing some slight growth here. It will slow down by the fourth quarter here next year, so that could be a problem. But right now it seems to be moving up nicely. Again, earnings move right here, and then looks like the previous chart quite a bit. And this is the weekly chart. 4 billion market cap, $127 roughly, and on the daily chart it's obeyed the 10-day pretty well. Again, took a break right here, fell back to the 21-day and then bounced. Now Friday's move is a little bit concerning because it is not only a reversal, but it came in really high volume, so that is one sell signal, so something to be cautious about. This DRI ranked 95, only 0.8% off the high after hitting new high. This is in the retail restaurant space here. 22 billion market cap, $187. So looking at the earnings growth, very stable, 10 to 12% the next 4 quarters. This is the really long base right here. You see base and base. And then it got really tighter, as you see right here, and then tighter. And then this was the last shakeout right here. And then on earnings day, this is actually quite recent, like in a week before, something like that. So we had this huge bounce, and it never really want to come back much. As you can see, this was the level here that it came back to. And as the 10-day moving average is starting to move up, it hasn't really come close to it, and you can see it's just keep making higher lows. So that is a sign of accumulation, and so it looks really good so far. Although this stock, like I said, hasn't been working for a long time, but maybe because it has been so long, like when it does work, they tend to work really well. So again, on the weekly chart, just want to come back to it. It just show how powerful it is, because it didn't want to go down and close at the top of the range. Looking at only 4 stocks that make new high on Fridays, which is, like I said, very little number. So I can tell the market is definitely losing its steam in terms of growth stocks continue to trend higher. But another characteristic I'm looking at is how many stocks are still in uptrend above the 10-21-day moving average. And right here I can count that there's about only 26 on my list. This is down from, I think, 40 plus last week. So again, that means that more stocks have actually went below the 10 and 21-day short-term moving averages. So again, this also signify another uh, the market that is the growth stock at least are not doing as well, right, from this going into this week. So with that being said, we're still seeing some stocks holding up: XMTR, Reddit, ALAB, PLTR. We talk about Rely, ALK, AVGO, AL, CAE, Way, LB, JPT, BIRK, AR, ATGE, AXGN. So this AXGN in the medical products group, you can see right here, it's a nice breakout right here on the weekly chart. It is turning positive in terms of earnings growth. So that's kind of going from negative to positive. So it's looking really good. And you can see the earnings line is starting to move up. On the daily chart, we see this nice cup handle breakout right here on high volume, 2 days in a row follow through right there, and then it start to pull back to barely just slightly above the 10-day, and then it bounced. So this might be a good entry point going forward if this stock will work. Now this is a $16 stock. Any stock in the tens or 20 or anything under that usually can be more volatile, right, from day to day swing. So just something to be cautious about. Again, this is a very small cap, like $0.7 billion. So just gotta be cautious about that. Next we have NOA, NBIX, NVMI, TDW, BMRN, TW, TDG. The two stocks I want to highlight here is LB and TDW. Both of them in the oil and gas area. Um, they are moving up again. Let's take a quick look. So here's Lambridge, oil and gas US exploration, 4 billion market cap, $64 stock. Looking at the chart, you can see this is a new IPO. It went up quite significantly until this recent correction. Um, it went below the red line, which is the 10-week moving average, and it kind of went back down to slightly just above $50. Now it's trading 64. The high was around 80. The numbers here looks pretty strong, like from 0.3 to 31 cents, 39, 39, and 44 cents. So it's starting to grow quite significantly. Looking at the daily chart, we see this really strong run from the IPO base right here. Um, and then we pull back really strong, and you can see it came back above the downtrend line. And then slowly right here, it went back above the 10-day on pretty good volume here. And then we have been kind of going up slowly each day, and right now we're above all the moving averages right here at this level, and even Thursday and Friday it continue on with that strength. So this is starting to look really good. Yeah, I would pay attention to this. You can see relative strength is at the highest, almost 98% of all stocks. Now TTW is tight water. This was a stock that did really well, I think, yeah, last year, but this year it hasn't done as well, and it did go into a huge correction. 50% off the highs right now, $51 trading at, and this is the level right now. Now we did see volume pick up here. There is a reversal on that week, but then this week it kind of came back and bounced off that. So it looks really good. We are under, like, 3-4 weeks now of since the bottom, and the numbers here are looking good: 70 to 94 cents, 102, 125, 145. So it looks like it is not slowing down, right? The earnings lines continue to go upward right here. Generally, on the downtrend, especially a long-term downtrend, the 50-day becomes very important key criteria right here. It may be slightly too early to get involved, but I mean, we see these highs right here form a downtrend line, and we kind of broke it this last 2 days. But a safer trend line would be the 50-day moving average here, because that will, have more momentum if it can surpass that. Now the volume side looks pretty good on the up days here, and then Thursday, Friday pick up on volume. Also on Tuesday, well, again, this week it's hard to tell from the volume side, but at least it is one of the lowest volume days on the downside in a long time. So going back as far as here. Now, it doesn't mean this will work, but it has correct severely, and it has, kind of formed like a lot of support level around this level here for like a few weeks now. So it's definitely much better than all this short-term bounce here, right? So and it's trading pretty tight as well. So yeah, to be safer, you probably wait until this clears this downtrend line back around, I say like 50 something, higher 50s, yeah. The downside, we have many stocks, 237 stocks right now considered to be under downtrend, um, based on the 10 and 21 day line moving average. This is the percent off high here, so that could be important, especially in a correction. Generally, IBD study shows that when the index correct 5%, it could the growth stocks could correct like 2 or 3 times that, so like 10 to 15%. If it correct 10% on the index, it could correct 20 to 30%. Now, the index is really hasn't gone down that much. To compare that, you can see percent of 52-week high for QQ. It's only 3%. On the SPY, it's only 2%. On the Dow, it's slightly more, closer to 5%. And on the small cap IWM, that is 9%. So given that, like I said, stocks could correct 2 to 3 times that amount, and if the indexes get weaker, probably more stocks will get hit. So it's very important to pay attention to that. And looking at the percent off high, we are starting to see more and more stocks heading towards the 10% range now. So here's a few like Tesla in that range. We see App is now 19% off highs. CRDO is now 12% off highs. Of course, they can bounce back very fast as well, right? But just again, just being a little bit more cautious how stocks will correct in a downtrend mode. SEZL has gone down quite a bit, 44%. CLS, a stock that I like, is down 5%. So those are holding up much better, like around the 5% mark is really good. But like I said, I'm seeing more stocks going towards the 10% or more now. Hood, 11%. TWLO is holding up pretty good, 6% down only. MAWO, SMTC, those guys are around 10%. Globe is holding a lot better, only 4.9%. This Globe is in the computer software enterprise, 9 billion market cap, around 54 to $5 trading price right now. You can see it's going to turn around from negative to positive number, and it's starting to improve quite well over the next year. This is a long base right here. Again, a lot of stocks did this in the last quarter where it just gap up and move up higher, and after that it never really came back. But this stock has been holding up really nice. Now it did break the 10-day, found support at the 21-day. It didn't even touch the 21-day, so that's a good sign. Here on Friday, it did come back down below that short-term moving average. Volume is really low, so that's a good sign compared to the day before. So yeah, this is looks very healthy right now. So we're seeing some stocks like IREN, AVPT now they're correcting quite a bit. HIM's correcting 24%. AXON, one of the leaders, down 12% right now. Shopify is about 10% down. GGAL in the foreign bank, down 8%, looks pretty good. Here's the chart right here. You can see it found support at 21-day reverse, and so far it has found support at the 10-day moving average. And Thursdays, Fridays trading is really tight. So I really like this action. Again, this stock has done really well so far. This is Argentina Bank. That's probably why, because Argentina did really well since their new election. Netflix down here, rank 59. It's only down 3%. We highlight that in the main market video up here. POC down 10%. CCL down 7%, also losing its momentum. Here's the chart right here. You can see it went back below the 10-day moving average. So a lot of stocks did this pattern, right? It fell below the short-term moving average, came back above it, and then fall back again because of Friday's move. So this is to me quite negative. But again, we're still above the low here. But if we undercut that last week's low, this could be spell a lot of trouble. So because then we really have fell twice, like 2 times, and more investors will start to give up, especially for stocks that have run really well recently in the last rally. So we'll have to be cautious because as they come closer to the red line, this is a very important line for it to find support. So we'll see how it acts around this level if it does come back to it. Before oil and gas field, this one it start to fall here and then it kind of accelerate right here, but it has since bounced back nicely, and it looks like at least short term it doesn't seem to want to go down anymore. It keep making higher lows, so this is worth paying attention. If it does come back above this trend line, it might have higher chance of success. It did come out of this huge base. It didn't really move far, so maybe at some point it might work. It's hard to say. 45 down roughly close to 10% now. Carguru also only down 5%. That one's holding up better than others here. We have Amazon, which we talked about, holding at 4% off high. RCL is also coming down now at 10%. Duolingo is now almost 12%. ServiceNow is at 6.6%. As we go down this list, I won't be able to go through all of them, but feel free to look at them. But you're starting to see more stocks near the 10% range. There's still a lot of stocks that are holding well. ISRG is another one. It's looking really good actually. We have STT here, only 3% down. Here we have more stocks near, like you can see here, like 15% now, most of them. As we go down this list, we see Power here at 7.7%. We see Monster at 7%. Surprisingly, this is doing well. Cohere now is down 14, almost 15%. NVO is probably one of the worst stock right now, surprisingly, after they announced their drug is not as effective for obesity drug. It's down 27% here. Some of the gold stocks got hit really hard. Nemo Mining is down 35% right now. We see more gold stocks down here. Gold is down 26%. Audio Eye is down right here. It's near the end of the list here, down 50%. That's crazy. So yeah, so I think it's time to be more cautious. As we start getting into the new year, we'll see if there is any capital gains tax selling into the new year. We'll see how the mega caps are holding. They didn't hold very well on Friday. If it's a one-day thing, then that's good. But if it continues, more likely it will drag the whole market down. If we do see divergence where the small caps start to bounce back, that'll be a good sign. And then we'll see how the growth stocks do as well. Thank you for watching this video. Please comment, like, and subscribe. Thank you. Hope everyone have a happy new year.